Hi, Jim Yent from Golden Years Advisors, the home of the Kairos formula. Unfortunately, I have the displeasure of telling you one of our world leaders didn't learn his lessons in kindergarten and decided to reach across and invade his neighbor. Of course, we're talking about Vladimir Putin and what's going on between Russia and the Ukraine. So there's three things I want to cover real quickly. We're going to give you a status on the invasion that's going on in terms of what it means from a scenario perspective. Second, the market impact. Third, the portfolio impact. So let's get into the invasion. Not surprisingly, because we've been watching this for several weeks now, it's happened. The invasion has gone forward. If you look at this chart, this is how we've been monitoring the situation over the last 4 weeks, with a best case on the left, two most likely cases in the middle, and then on the right, most chart in red, is a worst case. I can tell you that the best case is off the table. There's no diplomatic, and the leftmost most likely is off the table. So there's really two things we're still watching. Is this the rightmost most likely, which says Putin is trying to grab an eastern portion of the Ukraine and probably get a land bridge down to what he already took almost 8 years ago to the day when he invaded Crimea to try to get a seaport. Whether that's where this is going to end up, or if we go one column over, which is a worst case. Now, I always say there's even more worst cases, right? I mean, missiles could be in the air, especially of a nuclear type, but that's not what this worst case is. This worst case is he's trying to grab all of Ukraine. And we won't know which one of these is true, probably for at least a week. It could be even longer. But he is attacking Kiev as we speak. So the potential of him going after all of the Ukraine is on the table. Besides this chart, we're also attaching a 3-page document so you can read up on all this. But let's talk about the market impact now. Back in January, when we hit our lows, we did our correction, our long overdue correction. But we said we didn't know if it was over, partially because of this and some other things. Well, today with the action, we've seen the S&P hit a new lower intraday, went down about 16% from the peak. And on the NASDAQ side, it actually went to bear market. It's about 22% off the peak. Biden just did his address to the US and the rest of the world, and markets actually have bounced back a touch from it. So we don't think this is anything quick or easy, and we might be in some kind of stalemate position for an extended period of time. But bottom line is, we'd like to take you to one other chart, which says in general, when we've seen these types of geopolitical actions, if you look, and we have 4 different on the top, you'll see 3 different sets of bar charts. But we did the first one on the left, which says on average what happens, whether it's 1 week, 1 month, 3 months, or in yellow, a full 12 months later. On average, the initial reaction is like flat to not good. And especially in the middle set of bar charts, if there's a recession that is either happening or happens as a result of the geopolitical shock, things get really ugly. But on average, and if you look to the right, because thus far, this still doesn't look like a recession, at least in the United States. The first week, couple of months, not good, but it gets stronger over time. So whether it's on average a 6% rise in the market, or you see that double-digit one on the right, markets usually kind of shrug off a lot of geopolitical events unless there is a recession. Now, there's a lot of pain coming for Europe just because of some of the sanctions, as well as in Russia. Russia's going to have a lot of pain too. But we're a bit shielded here from the US perspective. So, don't be too grim about those types of situations. Now, from a portfolio impact, what's it mean? One of the other reasons why we want you to look at the 3-page attachment. First off, you can see a lot of changes. We think there'll be a lot more inflation. The worry that I have of the worst case is that if we really put a strong stranglehold on Russia, you'll probably see Russia try to weaponize their commodities back to us. Not just energy. Everyone thinks of Russia as a large exporter, and they are, of energy. But they also do 2 key commodities. They are the breadbasket of Europe. Russia is the biggest wheat producer, the Ukraine, the biggest corn producer. So you could see a weaponization of some of those commodities come back and cause a lot of misery on the world. But from a portfolio impact, we've already gone what I'll call defensive in the standpoint. We're putting large portions of the portfolio into energy, into commodity things because of the inflation, as well as into managed futures, and all of those to minimize any of the impacts that we're seeing. As an example, in the last week, the S&P fell, but if you look at something like global growth, it fell a third of what the S&P did. Low volatility stock about half. If you look at on the NASDAQ side, NASDAQ 100, compare it to like PowerFlex fell only about 45%. So we already have some of those things in place, and you'll probably watch us dial it up as we go forward. But the bottom line is, we want you to hold the line as we make the adjustments to the portfolio as we see how this plays out. So the next week or two be a big deal to see which of the two scenarios Putin is choosing, but this too shall pass, and we will move forward with it. So we got our eye on it. You stay healthy and keep the stiff upper lip. Okay, till next time, bye.